What's going on, guys? Today we're going to talk about the past and the future of the current crypto industry. I've been involved with the industry since 2010, particularly from the blockchain ledger side because I studied accounting, finance, and economics. So I saw the early banks talking about building ledgers. And blockchain is not a unique term or technology in the sense that nobody knew about it or thought about it before. What was unique was when Bitcoin was invented in that 2008 period before, well before I was aware of it. It had solved a couple of problems that were technological problems that nobody else could solve until, you know, the internet was at the cheap scale because they've been trying to build this type of technology, this type of internet money for many years. You can read about Bitcold. So it wasn't like nobody was working on it or didn't know about it or, it didn't just come out of nowhere. So while I was involved as an outsider, I wasn't really like looking for ways to get involved. I think the only time I looked to get involved was in 2013 when I tried to figure out how to do a sports gambling, um, not sports gambling, uh, online gambling, online poker for Atlantic City because sports gambling wasn't illegal yet, and online gambling was only legal in states where there were casinos. So Atlantic City, New Jersey was a happen chance. Still very difficult. Obviously, crypto is great for payments, so that would have been the solution, the only solution at that time. I don't think I would have been the only person, but it's extremely hard to pull it off. Anyway, it took from the period as an outsider, let's just say 2008 to 2010, only the insiders really knew about it. I mean, the developers in the ecosystem, maybe guys in World of Warcraft or other video game players or online players or gamblers. Then I got introduced through a developer. That's a buddy of mine told me about it by happen chance, because I'm in the fintech space and I did a lot in the trading floor space. So I learned about it. Exchanges are built on ledgers. So trading exchanges are built on ledgers. So it was very adjacent to what I was already working on. So I didn't come across it again or think about it until 2013. So I was completely out of it for those 3 years when I was introduced to it. And then going into, I think the hype cycle really started in 2017 when a lot more people probably, I think the price of Bitcoin was probably from like hundreds to thousands of dollars. A lot of people got interested to like $20,000. Then like Ethereum had its ICO, and I remember the ICO market was really big. It was a different type of fundraising environment. What was really interesting about the fundraising environment, if you're an investor or in the capital markets, is that crypto was the first time that you could raise capital from multiple countries across multiple borders without the regulations. Now there was a lot of gray area, a black area, and a lot of illicit activity, but it was the first time you can easily raise capital just online. Like crowdfunding, crowdsourcing was really popular in the early 2010s, but crypto made it possible to like create tokens and assets and applications and wallets and all this unique stuff. So that was really interesting. For context, Coinbase was invented because Brian Armstrong worked at Airbnb during that YC era, and one of the major problems Airbnb had was accepting money from foreign. He lived in Argentina, I think, when he was inventing Coinbase, was accepting money from foreign countries because it has to go through multiple accounts and it takes multiple counterparties, and then it takes days, like an ACH or wire, not a wire transfer, but like literally payment, just to send money can take days, or at least it did well before the current times in 2020s. So I didn't do anything from 2013 to 2018. Obviously, the industry really took off. There were a lot of great companies that came out of it, way more that failed in that era. I have to imagine there are like hundreds of thousands, if not millions, of people that basically spent a tremendous amount of dead time working on these technologies that didn't go anywhere. And then that 2018 ish, I think I wasn't really involved. I built one of the first courses in the industry, university courses to educate students about it, but I wasn't involved in the actual industry as an investor at all. Didn't care for Bitcoin, still don't in most cases. So it wasn't until COVID in like 2020, 21, 22, where it picked up steam again. The momentum picked up again. Why? Because it was an alternative asset. Obviously, all the countries in the world were printing a lot of money, particularly the United States. Interest rates were fluctuating, so either they were 0% or trying to go above 0%. So it was really hard to invest in bonds. Printing too much money inflated all assets, S&P 500, real estate, crypto, etc. And crypto really took off. 2021 is when the NFT market really picked up, which was interesting from a digital assets perspective. So what happens? Again, countless thousands, hundreds of thousands, millions of NFT projects that are tokenized assets were released, have zero, intrinsic value. And then behind the scenes, again, 100,000. I mean, I went to a couple conferences like the Ethereum conference and stuff like that because I was in that side of the ecosystem, but only really as a payment mechanism because it's an actual piece of software. And then eventually Solana. Those are like the two really secondary, tertiary winners, however you want to look at them, outside of Bitcoin. Everyone else has failed. They have almost acquired no momentum. They'll say a lot of things. They'll, maybe there are 10, 12 notable projects that I'm just not aware of that have either maybe pivoted to AI or they have pivoted to other types of technology that are necessary, and they've used their funding from their investors or, what was it called? A DAO, decentralized autonomous organizations, where they just raise money in a group for a community to go after a project like an NFT. So like the only NFT that was successful was VeeFriends by Gary Vaynerchuk, which has produced like comic books, cartoons, trading cards, has tremendous demand, has like TV shows. It is like a beautiful, he's raised hundreds of millions of dollars because it's a real like cartoon network, Disney style, Pixar studio project. And he's funded a real IP that people could buy, they can own it, and they get access to things through it. And it's been successful in his world. Most of the projects have failed. Then beyond that, I can't even think about anything else. So the interesting thing, before we get into where we are today, is the period between 2018, or like say 2015 to 2021, 5, 6, 7 years. Anybody who was in the Bitcoin space spent a tremendous amount of money trying to figure out how to mine Bitcoin, because that's the ecosystem works in that way. And the only way to do that, to do large computations, to do the mining of the Bitcoin from the network, was to buy NVIDIA GPUs. Now, the interesting point is that NVIDIA GPUs didn't have a massive use case besides gaming up until 2015, 2016. Now, gaming is very successful for multiple reasons. It's a multi-billion-dollar industry, trillions probably. GTA, World of Warcraft, all these other like beautiful PC-styled games require the NVIDIA GeForce GPUs, etc. During that period, if you were aware of NVIDIA, not the GPUs, not for gaming, but if you were aware of NVIDIA, they were attempting to do, which at that moment looked crazy, to invest in AI. Now, nobody knew what that really meant because we've been investing in AI for 80 years, and it's never been successful. But in 2015, I think OpenAI was founded. Sam Altman, Elon Musk, and Jensen was he built the first computer. I think it was called GSpark or GeoSpark or something for Tesla, for the first version of the self-driving car, or like some level of autonomy, level 1 or something. But this is in 2015. Even the Tesla car at that moment of time for autonomy was a dream. It was not possible at the moment. So then eventually, because Jensen's relationship with Elon, he went ahead and then said, I'll give you the first chip for OpenAI. And then, they worked on that for several years. I don't think they released the first product till 2018-ish. No one, unless you were like a machine learning or, somewhere in the AI research industry, you probably never heard of like the GPT-1 or 2. And even if you did, it wasn't even a good product. So it wasn't really successful in any form. So what's interesting is that crypto basically financed the GPU industry for 5, 6, 7 years, funding NVIDIA's growth in that particular space, building some tier 2, tier 3 data centers, which was the most interesting element of the GPU growth pipeline, because that happened to be what was necessary to finance the current versions of AI. I don't know if NVIDIA would have had the capacity or the bandwidth or the financing to finance actual production of the GPUs at the current stage. Now, I don't remember what GPU they were using at 2021, 22, when GPT-2, I think, released, or the first GPT version really went public viral in December 2022. Whatever it was, the demand from GPUs was really only between gaming and crypto. So crypto really financed that level of AI, the early stages of AI, of what we know of it today. So what happened right now? Last year in 2025, so after President Trump came into office in January, it was pivotal for several moments. Obviously, technology got a boom. Before he got into office, it was unknown if AI was going to be regulated by the government, private companies, public corporations, or something else. When he got into office, it became very clear. David Sachs, the czar of crypto and AI, came into office. He helped as the advisor to guide certain regulations and framework for the industry, which was very important. The first thing Sachs did, he's a software investor. The first thing he did is came out with 3 types of regulatory frameworks for crypto, which was very important: the Clarity Act, Stable Act, and the Genius Act. They attacked 3 different problems in the industry. I don't remember each of the regulatory frameworks in detail, but obviously the Stable Act was important for stablecoins. Circle went IPO. That was Coinbase's one of the largest joint ventures. Stripe, the largest online payment processor, acquired Bridge and Privy and like other assets to provide stablecoin as an online payment tool for other companies. Shopify did a venture between Stripe and Coinbase based on the Stable Act alone. So now they can accept stablecoins, distribute stablecoins, because it's more efficient than, again, cross-border transactions, which is exactly what crypto is very useful for. The Clarity Act, I think, was around assets, and then the Genius Act, I don't recall, that was a very important one as well. But this three-part regulation that has rolled out in several form factors over multiple timelines in the past 18 months now have been very important for the industry because it provided a tremendous amount of regulatory clarity. Now, what happens to the industry? Obviously, Bitcoin's important. I think I've seen that Blockworks, that does these institutional events for the industry, said the demand from the institutional level, the BlackRock style, Van Eck, Fidelity, like those level of investment managers are gung-ho about buying Bitcoin, either through ETFs or direct holding. Well, what's interesting is that no other cryptos are mentioned. So that means the demand, the liquidity for those the other assets, verticals, have kind of dried up. And the retail doesn't exist for it anymore. The demand for it probably peaked during the NFT marketplace hype cycle. So anything else that's not number one, really, I don't even think Ethereum or Solana have the liquidity or demand that they used to once have, because they're not considered grade A, grade tier assets, because only Bitcoin is, for multiple internal reasons, meaning the mechanism of how it works. So now there's clarity. Anybody and everybody, they have regulatory approval. They got the green light. So asset managers, financial advisors can just buy Bitcoin with no question now because it's been approved. But because that level of approval has been achieved, now the liquidity in the market has stabilized. We're not going to see this huge rush that's going to pump the market. Outside of maybe Michael Saylor, who's been trying to buy up until recently, now he just wants to sell. Nobody else is going to come in the market to buy $50 billion. It's going to be like a gold style, just trickle in. When something goes wrong, they'll buy more. When something goes right in the market, they'll sell Bitcoin, crypto, and then buy index or equities or something else, or derivatives, fixed income. So I think the liquidity has basically stabilized. So the promise of what XYZ is going to happen, it actually already happened. It's not been notable because it's kind of greenlit. And, between the years of 2022 and 2024, there was a dead market of fintech. There were no IPOs. There haven't been no new banks, etc. because of all that stalling for those 2, 3, 4 years, that industry basically died. And then they revived it with regulatory clarity. And now anybody and everybody can join without, the fear of getting banned from a bank, or, getting blacklisted from an investment fund, or some other institution, maybe a regulatory institution. I think Palmer Luckey, Peter Thiel, and a couple other guys started a bank called Arabo, and it is crypto focused because I think the Silicon Valley Bank and the other bank that had gone under in that 2022 or 23 period, one of the reasons was it was crypto related. I mean, there was a lot of association with either crypto assets or startup assets or tech assets. So there was a lot of concern there. People were getting flagged. The industry, I think, has matured. And I don't think people have just acknowledged that. A lot of people have now, obviously, the demand for GPUs coming back to NVIDIA has just shifted to tier one data centers like Colossus from SpaceX XI. Microsoft's buying data centers or building their own. Google has their own. Everybody's buying different types. AWS, Amazon has their own. OpenAI has their own. Anthropic has multiple from multiple vendors. So everybody's buying GPUs from NVIDIA, but they're not buying it to do the computational requirements for Bitcoin. They're doing it to computational requirements for new models of AI. So that shift, that pivot into a new industry has been very real. One, because AI has gotten much better. I talked about this yesterday. And two, you can monetize it in software. You can monetize it in video, monetize it in text, in business, in operations, in finance, in legal. All these industry verticals have new opportunity, and at the scale, there's no limit for intelligence. The demand is limitless. So I think it's important to factor this in going forward because it shifted. We had this 10, 15-year period of where crypto was trying to find its place in the industry and want to buy this, do that, get transactional regulatory approval, and it happened. And once it happened, you have to just acknowledge that it happened and move on. And now you even move on. Now you don't have to do software, you don't have to do AI, but you do have to do the thing that you've been working on because it's important, either because it's a business or it pays the income, pays the bills, or do something like that. That's industry, and now it's applicable and has more real world value than simply digital assets. So I think that I don't know what the future is particularly, but I do think that Bitcoin will be the standalone asset. It will be viewed as a commodity, maybe a currency. It will have more regulatory frameworks that are provided over the next 2, 3, 4, 5 years. Obviously, I think you can get mortgages and get financing and more lending vehicles. So people will use it like a gold type of asset, but I don't think it's going to move. I don't think you're going to have significant changes. You shouldn't hope for things in that space. I think you should look for better technologies to invest in. So I think that's the current stance for crypto. I don't see anything changing. I think it's better to just focus on areas like software, hardware, services, and other verticals across the economy. I think that's where the real money is headed now. So I'll see you guys soon.